Good afternoon, ladies and gentlemen. Of course, good afternoon to those of you joining me here on the East Coast. It's just after 12 noon Eastern Time. We'll say good morning to those of you joining us in the Central Time Zones, the Mountain Time Zones, and the Pacific Time Zones. And of course, good evening or good early morning to any of you who are joining us from across the pond in parts of UK or parts of Europe or parts of Australia, New Zealand, or Asia. Welcome to today's presentation for May 24th, 2017. How do you find new options trades? Today we're going to discuss using the patented PowerOptions tools to find new options trades, whether you're just getting started, whether you have a specific set of criteria in mind for a given strategy and what types of options you'd want to see, whether you're trading weeklies or standard options, whether you're looking at one stock at a time or not. Now, for those of you who don't know me, my name is Mike Chupko, of course. I'm the Director of Education here at PowerOptions. PowerOptions is a patented suite of search and analysis tools for self-directed options investors. It was created by Ernest Renner back in 1997. Now, on a regular daily basis, I handle a lot of coaching sessions from our trial members and clients, as well as organize the webinars, blogs, and other educational material on the site. I have, of course, co-authored 2 books with Ernie, and I've presented around the country for different seminars on options trading and investing. I am, of course, versed in all of the 23 strategies, plus more that we support on PowerOptions as well. Now, what I want to cover today is we're going to review the tools available on PowerOptions to help you find new positions quickly and efficiently. As I mentioned, whether you're looking for a new position one stock at a time, or whether you're looking across the universe of options to find positions in a given strategy that match your requirements. Or again, you're just getting started from scratch and you don't know what criteria you might want to use. We're going to talk about quickly navigating the filters that you might want to use in a given strategy. And we're going to look at the tools available for various strategies as well. We're also going to talk about general tips and suggestions. Now, before we do that, I want to run a quick poll to see what option strategies you're trading right now. But before I run the poll, I've got a comment that came in from Robert, and Robert says that there is no more sound. So for those of you that are online, if you can hear me, can you go ahead and write in that you're able to hear me coming through? Just use the question pod there in the GoToWebinar, GoToMeeting platform that appeared, and let me know if you're able to hear me. Okay, Robert said the sound just came back. Stanley said there's good sound. GM says he can hear everything okay. All right, so we're all set with the sound. So let me launch that quick poll. It's the only poll we'll have today. Of course, as I mentioned, we just want to know, what are you interested in seeing today as far as the PowerOptions tools go? Meaning, what kind of positions are you mainly looking at, trading in your personal account, or researching right now? Are you mainly looking at covered calls and cash-secured naked puts? Are you looking at sort of protected positions, married put trades, collar positions? Are you buying options, looking at long calls and long puts? Or are you mainly doing credit spreads and debit spreads, or some of you doing the horizontal and diagonal spreads? I've got over 50% of you voted. The poll's been open for about 30 seconds. I'm going to leave it open for another 15-20 seconds or so, for about a full minute. So we'll see there what results come in of what you're trading right now. All right, so we do have 2 that are clearly ahead, but we do have votes in all 5 of our categories. So it's been open for about a minute and 10 seconds. I'm going to go ahead and close the poll and let us share the results with everyone. So 53% of you are doing covered calls and naked puts, fantastic. And about 32% of you are also implying the insured positions, protected positions as well. Now I've got 63% of you doing vertical spreads. That looks like the winner, and 42% of you are buying calls and buying puts. And then, of course, 16% of us are using the time spreads. All right, well, fantastic. The reason why I wanted to run that poll is because we have various individual tools in each of the strategies to show you if you're looking for positions one stock at a time. And We're going to start off with that, and then we're going to get into quickly using the search tool for your personal needs and the search criteria that are available for those particular strategies. Now, all of that being said, let us navigate over to the PowerOptions suite of tools here so we can get you started and see what we have to help you with your new options selections. Now, what we're looking at here is the basic 14-day free trial to PowerOptions. As you can see up at the top, we have various strategies available to select from. And what I'm going to do first is make sure that all the strategies that we want to view that you answered in the poll are represented. So the first thing I want to do is we're going to go into the Other Strategies tab. Let me clear out that little circle I just made. There we go. And this shows us all of the available strategies on the left and our selected strategies on the right. So let me go ahead and clear everything out. We're going to go with the popular vote today. So we're going to start off with let's go ahead and do a bull put credit, add that to tab number 1. We can do bear call credit as well, but also add bull call debit, or maybe bear put debit. I'll put bull call debit in there so we can see the tools available on the vertical spreads. Next highest was covered calls and naked puts, so we'll just select that from our menu as well. Add those two over also. Naked put down here at the bottom. Now we're going to also add in our next one was long options. Let's go ahead and go with long calls for the time being. Don't worry, we'll also look at long puts. All right, and then we have the protective option strategies, so we'll add married puts and collars in there for us very quickly. And last but not least, long collar, my apologies, we want to put in calendar call spreads also. Okay, so once I've got this selected, I'm going to save configuration. Now, using one stock at a time, many of you might be using your broker and you might be taking a look at an option chain. Well, you can do that here at PowerOptions as well, of course, if you're trying to build your own credit spread. But let's say for whatever reason, we were interested in maybe taking a bull put credit spread position on Apple, or let's say even a higher priced ETF such as SPY. Well, the simple tools that we can use is we could go directly into the search by symbol tool. Now, of course, this is going to be better than an option chain because it's going to show you the spread in an individual format. So I'll start off with Apple. Very simple. And then we can go ahead and select our trading month. So I can go June, or we can also select to look at all weeklies or all expirations. And then, of course, let's just go up to more results. So it's a simple interface. There's a search by symbol tool available for every strategy. And let's go ahead and click Submit. Now, we see here the listing of the spread positions in order, meaning that we have our sell option listed with our buy option going across the horizon here, the total net credit and return, and the probability. Now, I selected more results, so we see here a very long list of trades. Now, we're going to want to filter that down a little bit more, aren't we? So for those of you doing spread trades, there's two ways in PowerOptions that you can better and more quickly find the spreads that match your specific requirements one stock at a time. Rather than use the search by symbol tool, what I'm going to do is go over to the spread chain. The spread chain tool allows us to see credit spreads, either bull put or bear call, debit spreads, and then the credit and debit parity for calls and for puts as well. So if I decided already that I was going to do a bull put credit spread on Apple, what I'd likely want to do is put in what my requirements were. Rather than seeing that full list, I simply want to see a few things. I'm going to stick with some maybe 9-day out spread. Let's go to June 2nd, maybe the weeklies, maybe the 16-day out, which is standard expiration. But knowing that we have $1.50 strike differences, simply put my spread within it 2. I'm going to want a minimum net credit for my shorter term. Let's put in at least 15 cents. But I also want to be, we'll try at least 2% out of the money. Minimum 5% return on my 2-point spread. And let's say I want a probability of at least 75. I'm going to select the June 2nd expiration, which is 9 days out. And we see here that there is only one bull put credit spread that matches that requirement. We have here the June 132.50. Oh, sorry. Didn't do what I wanted it to. Okay, so there's the Apple spread that we wanted right there. Okay, so I'm sorry about that. We've got the 147, 149 put, basic profit and loss chart. This tool, the advantage of using this tool for one stock at a time is it's actually using the midpoint prices for the positions. So you have a 22-cent midpoint, buying the 147 put, and selling the 149 put at 41 cents. So we get a 19-cent net credit, a 10.5% return, and of course we know our risk as well. That's just the profit and loss view. Here we see our probability is at 83.3%. So if I wanted to see more spreads, how could I open this up? Well, we just have to lower some restrictions. Let's go back to only 1% out of the money with our weekly option 9 days out in time. Let's lower this down to maybe 10 cents of net credit. Now let's go ahead and submit that. Okay, so now we get 3 spreads. Where we'd expect to see with Apple trading at 152. We've got the 150, 148 for next week's expiration, higher return of 15%, but of course, it's got the lower probability at 76.5. That's our trade-off. We know we have the return of 7.5% with a probability of 88.8, sticking with that 148, 146. Interestingly enough, no bear calls come up which match that criteria. But I've already decided I was bullish on this position. So rather than look at the straight credit spread view, what I probably want to take a look at is the put credit and call debit parity and change my values to match what we wanted to see again. I wanted the 10 cents, minimum return of 5%, and that minimum 75% probability. And again, we're sticking with June 9th. So why would I want to see this view? And it's because this gives me a parity view. The lower probability bull put spread that we looked at, the 150, 148, is shown over here on the right-hand side. At midpoint, we could get a net credit of 27 cents, which gives us that 15.6% return. Again, that's selling the 150 put, buying the 148. Now, the call debit parity would be if I did the same thing but paid a debit. If I sold the 150 call slightly in the money and bought the 148, I'd have a debit of 170 using the midpoint. But with a 2-point difference in strike prices, if the stock stays above 150, same risk-reward profile as my bull put credit spread, I'd be able to get $2 back by closing the spread, which means my net return would be 30 cents or 17.6. So here we see that the lower probability bull call debit spread parity trade actually gives us a better return than the bull put. But if you wanted more protection, 83% probability and 88% probability for this 9-day trade, you're better off in the bull put, which in this case gives you a higher net return. 5.3 versus 7.5. Naturally, I'd go with 7.5. It's the same risk-reward profile. Same max profit is made if the stock's above 150. Same max loss is realized if the stock's below 148. And then, of course, we see the other one here at 9.9% as opposed to 9.3. So when you've decided to do a directional vertical spread, the spread chain tool, you already know the stock, whether you read about it in the news, a friend recommended it to you, it's something you've been following, whether you're bullish or bearish, the parity views here allow you to compare which spread, debit or credit, will likely give you the best bang for the buck using the midpoint prices. It's a much faster and more efficient tool to use than the search by symbol because we can narrow down our results using these basic criteria, which is not on the search by symbol tool. Okay, so one spread at a time or one stock at a time. For those of you doing vertical spreads, you're going to want to start to get familiar with the spread chain. It's a fast, efficient tool. You can compare parity trades right off the bat. And for those of you, I'm going to lower our criteria a little bit one more time. We're going to take our probability down to 70. And we're going to leave the other criteria, but I'm going to go back to just our credit spread view. Still nothing. So let me take this down to 70 one more time. I'm going to leave the net credit there. Wow. Spare call spreads are not helping us much, are they? Spread width at 2. Okay, let's go to 0.5. I just want to show something real quick. And it's not helping me. Okay. Let me go to the 16th. That's why. Okay, I apologize. Last time, wanted to get some, I'm sorry, I was trying to get some bear calls in there. Let's use a different, I apologize. Let's use a different scenario. I'm going to use SPY, 2-point spread, June 16th, 10-cent net credit, 0.5% out of the money, and we'll do that as well, greater than 65. Let's try SPY. Okay. For whatever reason, we weren't seeing any Apple bear calls. I'm not sure, but I'll look into that. But here we go. What you're seeing here is on the left-hand side is the bear call credits. With SPY at 240.25, our 65% probabilities here, we see 243 and 245 spreads for the bear calls, 74 roughly percent probability, a 1.1% range out of the money, 26-cent net credit. For those of you doing iron condors, what this allows you to do is, let's say you wanted both legs of your iron condor to be above 75% and still offering at least a 5% return with your other criteria. So now you can easily and quickly mix and match. So I could say, okay, maybe I want to do this 2-point spread, 243, 245 bear call spread with the 234.5, 236.5 bull put. So this could be your iron condor. It's not shown in an iron condor format. You can use the search tool to do that. But this also gives you a quick view. If you had to have a probability of 82% or more, for example, on your spread positions, still keeping that minimum requirements in there, for a 7-day trade, 9-day trade, we can see immediately that the best focus for you would be the 244.5, 246.5 bear call combined with one of these other bull puts that are available as well. Okay, so this spread chain tool, you can access it directly at any time just by putting in a stock at the top here and clicking on the spread chain. You can access it in the signature tools or underneath the individual vertical spread strategies. A very powerful tool, very efficient, very quick to help you find the credit spread you want and compare it to the parity trade that you'd want to see. If you're doing a bull put, you'd want to see if you can get more bang for the buck with the bull call and vice versa. All right, covered calls and naked puts, one stock at a time. There's a variety of different tools we have available for covered calls. The simplest of them just being what's called the quick find tool. So again, let's say we're neutral to bullish on Apple, want to try to generate maybe a 1% yield or some decent premium. The first tool I might look at is called the quick find tool. Very similar interface, simple, as we just saw with the search by symbol tool, but I can just plug in AAPL and put in how many number of shares you're planning on buying. I'll look at 100, and we'll just click the Get My Money on the Table report. This is a real simple view, and let's break it down very quickly. What it's showing you is that with the stock, of course, at 152, oops, sorry folks, 99, here at the top, we selected just a neutral bias on the position. So it's showing us the breakdown of what we could easily see. We could sell the out of the money June 155 call. That would be considered more bullish. It's more speculative. Well, we generate $172 right now. That's the money on the table we'd receive. The premium available times 100. And then, of course, the max potential if assigned is $373. So we'd get that gain of about $2, $2.01 up to 155 plus the 172. And of course, we can see this only gives us a 1.1 downside protection. You want to be more conservative, you could go with the 152.50, right at the money, generating $290, a little bit higher premium, but no real intrinsic gain. In fact, you're giving up 50 cents because you're slightly in the money, but still a reasonable return of about 241, 1.8% or so. If assigned at 155, you have almost a 2% downside protection. And then, of course, more conservative, going in the money, the 150 call. You could generate 450 up front right now. That's the premium you'd receive. And of course, your max profit is 151, and you have a higher downside protection. So this is a very quick view. Very simple, shows you what premium you collect, what your max profit would be at assignment, and your downside protection. But what's missing? Well, I can't select different expirations on this tool. It's showing me the natural standard June expiration. Okay, 16th of June, 155 call. To get more view and more data, as I mentioned, this is a simple view just showing your downside protection, your max monetary potential profit, and the money on the table. But hey, we're options investors here too. I know a lot of you like to delve into the delta, the implied volatility, maybe even Black-Scholes ratios or IV over HV ratios. For those of you doing covered calls, the easiest tool to use is the option chain. Well, so what? Everyone has an option chain. Your broker does. You can get a free chain at Yahoo Finance. Why should I care what PowerOptions offers? On the straight call chain, on PowerOptions, we offer you the ability to select multiple criteria, whether you want to delve into the Greeks. You want to look at IV ranges, IV ratios for the options, overvalued or undervalued based on Black-Scholes or other ratios as well. Things such as the time value, range in or out of the money, the probability above, and most important, these three little criteria here on the chain. This is showing you the returns. If you open this position as a covered call, so if I bought Apple right now at 152.99 and sold the Friday 155 strike for 20 cents, well, I might get a 1.4% if assigned on that covered call and 0.1% downside protection. Well, that's what I'd expect with a weekly option, only 2 days to expiration. But as I mentioned, you can customize this view, but you have the columns here to show you the return that's important to a covered call trader. The downside protection, how far the stock can drop as a covered call position before you're starting to lose money on the trade. The percent return if unchanged, if you're at the money or slightly out of the money, what is the yield you'd expect if the stock remains at the same price, and most importantly, the percent if assigned. Combined with the other columns you can select, delta, probability above. This allows you a quick comparison across different strikes and different expirations to quickly evaluate which covered call would be the best for your trading plan and for your needs. So if we go out to June 16th expiration, we see that we have different series here. The at the money giving us that 2.2% return and about a 1% downside protection with a price of 127. Then we could go slightly in the money as we saw to the 242. We could even go lower here to the 150 to get about a 0.7% yield also. Okay, so for covered calls and for naked puts, I'd recommend using the option chain. Okay, right underneath you just go to the option chain there, and as I mentioned, at any time you can click on choose columns in the call chain or the put chain, so you can quickly choose if you wanted to see such things as the different Greeks that are available, delta, gamma, theta, vega, and rho, annualized returns, annualized return if assigned, time value, probabilities, IV ratios, Black-Scholes ratios for overvalued and undervalued, of course, last, option high, option low, volume, open interest, percentage option volume, and more. So depending on how deep you want to delve into the data and what you want to see for your trading needs, that's all available here in the option chain. For covered calls and for naked puts, we'd probably take out some of those, but we'd want to see the naked yield, which is available, the percent to break even, which is available, and more. All right, those of you doing long calls and long puts, we already saw the Apple's trading at 152.59. 152.99, my apologies. So Why would I buy a call on Apple? Well, it's because I'm bullish on the stock. But if I've decided to buy a call, it's because I have some projection in my mind. Or maybe I saw on a website that they're projecting that Apple's going to be trading at 156 in the next 15 days around June expiration. Okay? So rather than go to the option chain, which of course you still could do, and evaluate the call prices and all of the data, a better tool to use if you're looking to buy a call or buy a put, one stock at a time, is to use the long option finder. And what the long option finder tool allows us to do is we can put in our stock symbol, our expected price of the stock. I'm going to use 156. Whatever my projection is, it's not a recommendation or suggestion. I'm not buying calls on Apple after we get off the phone here today. And let's say I was going to dump maybe $1,500 into a call purchase, or $500, whatever your plan was. And I had mentioned that maybe around June 16th or June 15th or so, let's say June 16th, we feel that Apple's going to hit that target of 156. Let me go ahead and click Submit. In that brief instant, what this tool did is it went out and looked at every available option on Apple. It grabbed the current option price for every single call option, because we put that the stock was moving up from its current value, and it calculated how much we could buy based on our investment amount and what that option would theoretically be worth. If the stock was trading at our target price on our target date, and it ranked the options based on highest percentage return. So if my projection was that Apple would hit 156 on or around June 16th, shows me here that the 23rd of June 147 call, slightly in the money, currently priced at 720, which means I could buy 2 contracts with the $1,500 I was going to invest, would be roughly worth 901 on 6/16. Is that believable? Well, it's 7 days to expiration. The call would be 9 points in the money. Might be a little bit extra time value, but we could expect it to be at least worth $9, maybe a little bit more. And in this case, our investment of $1,442 would go up to $1,800. So we'd have a 25% return. So you say, well, why aren't the June 16 options showing up? Well, they're not showing up because I selected June 16th. If I selected the day before expiration, probably going to see some out of the money June 16th series. There you go. And we didn't. Believe it or not, the 149 call right now would offer the highest return at 33%. The 153 or the 154 have a lower return, and that's why they're not showing up on our field. Okay, so even the June 23rd deep in the money options actually have a higher return than what you'd see with the out of the money options. So what did this tool just do? It gave me a quick view to decide without going through and analyzing the delta, the percent option volume, and things of that nature. If I thought Apple was going to be trading around this price in the next 10, 15 days or so, 20 days, this is the strike price that would theoretically give me the best bang for the buck. Of course, you'd see higher returns if you put in a higher value. I'm going to put up a $3 higher gain on Apple, which is very small considering a 150 stock. But let's say we put in 165. Someone had commented, well, those don't look like good returns. Well, it's based on your projection. Okay, so if I only put in a 3-point projection on a $150 stock, a 30% return on an option is still a good deal. Stock hasn't moved that much. But of course, you put in an 8, 10, 11-point movement on the stock, you're going to expect to see higher returns. And now the out-of-the-money, inexpensive options appear. But with smaller move, the out-of-the-money option is not the best bet. Not only does this tool emphasize that, but it's showing you very quickly which call or which put give you the best bang for the buck based on your expectation. Even though I entered the long option finder from the long call menu, if I was bearish on Apple and thought it would drop down to, say, 147 or 148 by June 15th, this would now show me which puts would give me the best yield based on my expectations of the stock moving forward. So if I thought it was going to drop down June 15th, get about 139% return with the at the money. slightly in the money actually, but the at the money June 152.5 put with Apple right around 153, that would give us the best yield on the position. And you could still delve deeper into it if you want to look at more information for the volume and open interest as shown, but you could always go to the options research tool if you want to see more information for the different Black-Scholes values, IVHV ratios, and more, midpoint price as already shown for you here on this page as well. Okay, so for those of you doing the long call and long put, you likely decided one stock at a time, you already had a projection, so you want to use the long option finder, put in your values, see which option quickly gives you the best bang for your buck. For those of us doing married puts or long collars, there's two tools that you can use. If you're tracking a stock, or there's a stock in your portfolio that you already have a gain in, you'd want to be using the insurance tool. So if I'm sitting on shares of Apple that I purchased, let's say I did purchase at 147, what this tool allows you to do is just put in your cost basis for the stock and your symbol, and you can toggle between the different expiration months. I'll start off with all months for the put. And this shows me here that we have an unrealized locked-in profit, or I'm sorry, an unrealized profit of 4.1, but I can lock in profit using the 23-day outputs, the 37-day outputs, and more. So I have a guaranteed profit with still unlimited upside for 20-day, 30-day, maybe 40 days of insurance in place. I could even go out 114 days to September and lock in 2.9% and still leave the upside open. But you can also convert this to a collar. So let's say I wanted to go June versus June, or all weeklies versus all weeklies. Here it shows me the collars that give me the best locked-in profit and best assigned. So even though I have a 4.1% unrealized gain, I could guarantee a profit of 4.2% doing variations of conversions or standard collars on this position, where I could even increase the percent of assigned return higher, but still guarantee a profit as well. But if you're just starting off, looking at a stock and thinking which married put or which collar to buy, in both tools I would use the search by symbol, and then you could customize that further as well, and the same for the calendar calls. Okay, so quick review for what we decided here and what we talked about. Bull put credit, you can use the search by symbol. I'm going to recommend you get familiar with the spread chain and start using that one stock at a time. Covered calls, the quick find tool is a very useful tool to use just to see the quick money on the table, but those of you who want to delve deeper into the data, be able to customize your data view, I'm going to recommend using the option chain for covered calls and naked puts, where you can select to see the percent if assigned, the downside protection and percent if unchanged, opening that position as a covered call, or in the naked put, we'd customize that field to look at the time value, percent time value, naked yield, and percent to break even. Buying calls and buying puts, best you could use the option chain again, but I like using the long option finder because it's a real quick view based on my projections. It shows me right away which option would give me the best bang for the buck. There's other strategies for married puts and long collars. If you have a stock where you have an unrealized gain, you have a lower cost basis than where it's trading, that insurance tool can show you where you can lock in profit right now and still convert it into a collar to see higher returns, or you could use the search by symbol if you're opening a new position from scratch. All right, now that's all well and good for those of us that have a stock in mind. What about those of us who don't have a stock in mind, where we want to look across the entire universe of options to identify positions that either match our criteria or to get some search ideas, okay? And Patrick, I'll get to your question in just a second. For those of you doing credit spreads, there's two fields that you can use to get started. You want to get trade ideas quickly. You want to see opportunities for potential bull puts or bear call spreads or maybe bull call debits. So underneath each strategy, what we can do here is we can start off with sample searches. We've set these up for you. These are themed searches that you can use as a stepping stone to create your own personal search. So for bull put credit, we have a basic screen that's just looking for bull puts on ETFs, looking mostly at the standard ETFs, where we don't see the inverse or the 2 times or 3 times. 5-star bull put search. What is this? You're interested in bull puts, but you don't know what really to search for. Well, this sample screen is looking for only those stocks that are rated 5-star buys by Standard & Poor's, but also looking for at least a 4% range out of the money, reasonable probability of aspiring worthless, and a reasonable return. So I'll just click on 5-star bull put search. That'll take us into the search field, and we start off with UAL, United Continental Holdings, trading at 78.86, and I see that we can sell the 75.5 strike for $1.04, buy the 74 strike standard June expiration for 75. This gives me a net credit of 29 cents for a 24% return, and it's a 71.6 theoretical probability above. Okay, so that's a reasonable trade. You could now do quickly further research and analysis looking at the stock chart, company information. That's what these more information buttons here. I could look at the midpoint spread chain right away to compare it against the bull call debit parity trade, as well as look at the profit and loss chart to run what if scenarios. But where do these trades come from? You look at this and you say, oh, well, maybe I don't like to use these 1.5 point spreads. Maybe I don't want to go to June 16th. I wanted to see weeklies. No problem. Anytime you start off with a default search criteria or one of our sample searches, these are designed for you to use as a stepping stone to create your own personal search. Give you trade ideas also, but to use as a stepping stone, I can scroll down below the listed trades, and in every strategy, you'll see the same essential tool down below. We call this the parameter field. And what this allows me to do is customize what I want to see for my trading goals for our options criteria, our stock technicals, stock fundamentals, and of course, lists. We'll get to Patrick's question in just a moment regarding how to use the list feature. But what did this sample search do for us? Anytime you open a default search in a given strategy or a sample search, the exact criteria that are being used in each category are shown right over here on the right-hand side. So for this 5-star search, bull put credit spreads, we're looking for positions that are 15 to 55 days out in time. Why are we not using weeklies? Well, it's because if you're looking for a stock that's rated 5-star and has some other good fundamental criteria, the return on a 8-day trade or 6-day trade is probably only 10 or 15 cents. It's really small. You get a better return going further out in time on stocks that have lower volatility, that are higher rated, bigger market cap. Okay? But we are still looking for a minimum net credit of at least 25 cents. And of course, we're restricting the strike prices. We want a return greater than 3%, be at least 4% out of the money, so our probabilities are going to be in that 70% range. We don't have anything in for the technicals or fundamentals, which is important. I'll show why in a moment, because we narrowed it down to the S&P 5-star lists. So as I mentioned, we've already restricted the universe of options. So what are 2 things you might want to change right away? Let's say you are interested in weekly options. First thing I'd want to do is I can just use this as a stepping stone, and I'm going to change my expiration date to be between 2 to 17 days out in time. Why start at greater than 2? So that limits out the Friday expirations that are 2 days away. I only want to see the 9-day out June 2nd series and the June 16th series, which was 16 days out in time. I'm going to leave the net credit alone, and I'm going to up our percent return. Very simple interface. Just plug in what you want to see for your trading plan. I'm also going to take the strike differences to be greater than or equal to 2. Okay? And you could adjust volume and open interest. Now I just made 2 changes. Changed my expiration date, changed my strike difference range. Let's go ahead and submit that. Yes, I'm avoiding $1 strikes, but you could set it to just $1 strikes. Okay, now my list is dominated by a single stock, Avago. But for doing a bull put spread, I'd probably want to do something else, wouldn't I? What is the one thing that I want to avoid with a vertical spread, a bull put or a bear call, even an iron condor? I want to avoid any surprise that could cause the stock to swing wildly against my expectations. So the first thing I'm going to do is go into fundamentals. In addition to limiting stock price range, which I don't need to do because I'm using a spread, so I've already limited that. I could put in other filters. If I'm doing a bull put spread, I might want to look for stocks that have a positive earnings per share growth, maybe a reasonable range of price to earnings. I might only want to look for mid to large cap stocks, and any of the filters that are available when you hover over them, you'll get a pop-up definition which shows you what fields you might want to enter. But most importantly for me right now is down here at the bottom for earnings date and ex-dividend date. So for this position, I want to avoid stocks that are going to have an earnings date between now and expiration. All right, let's go ahead and submit that. That's what I figured. So there is no bull put spreads available. If there were, this tool would find them, that expire in the next 2 weeks, that have a minimum net credit of 25 cents with a 5% return, strike difference greater than or equal to 2, that's probably what's hindering. If I put that at 1, we'd see some, and are at least 4% out of the money. That's the other hindrance. Let's take the out of the money range out. And of course, that don't have earnings between now and expiration. I knew once that was dominated by one stock, it's because there's an event coming up that made all of those options overpriced. If you're bullish on a Vago, it'd be taking a chance on a bull put spread, because if the earnings disappoint between now and the expiration date, probably coming up in a couple days, and that stock falls, you're all of a sudden at max loss. So now I'm only going to go 1% out of the money, but I'm going to increase the probability of expiring worthless to at least 75%. I'm keeping the 25-cent net credit. There we go. So there's some of our Apple positions that we saw earlier. The June 9th, 149, 147 with that 17% return. Lockheed Martin, Google's in here as well. Okay, so those are the spreads that match this criteria. But remember, there's another restriction. You can probably, someone did mention, is there's much more spreads out there than that for the next 2 weeks. You're right. But remember, we started with a sample search that was restricting the universe of options in the lists to only be the S&P 5 stars. So this probably already took it down to only maybe 40 or less stocks out of the, 4,500 optionable stocks, ETFs, and indexes. That's why we're seeing less results. Plus, we're filtering by the earnings, not between now and expiration. All right? So what Patrick's question was is that I can choose to go no lists in my search, and then I can choose to maybe exclude things that I wouldn't want to see, such as 2 times and 3 times ETFs, which are more volatile, and inverse ETFs that are going to move opposite my market sentiment. So I can remove that. What Patrick's question was is, how can I screen against my list of stocks? Simple. Just hit Create and Modify Lists. This will take you to a field where you can create your personal list or combine lists from our default selection. And once you create your list of the stocks that you want to see and save that, it'll be available here in this drop-down menu, and you can set up a basic search just against your stocks. Okay? That's how you use the list field. You can remove stocks, you can remove sectors or industries, or include them and screen against them directly to help you save time. All right, let's go to square one. We're interested in vertical spreads. We're bullish across the market. Okay. Ade says, how do you search for trades in the earnings season? Okay, well, if I'm playing earnings, Ade, I'm looking for a position that's going to profit to the upside and to the downside, and I'm going to have a controlled risk. So I wouldn't be doing bull put spreads on stocks that have earnings coming up, or bear calls, or iron condors. It's a neutral position. Why risk it? Why take that risk? So rather than what we're talking about today with the strategies that were selected, I'd go into other strategies. I'm looking at long straddles and long strangles that have earnings coming up between now and the next couple of weeks, and I'm evaluating those positions in the search tool, not using credit spreads. Okay, so just select long straddle, long strangle, put in the criteria you'd want for the maximum net debit you'd want to pay on the straddle or strangle, and click that box to see earnings between now and 1 week from now or 2 weeks from now. You'll be able to see straddles that are available short term or farther term with earnings coming up in the next 1 week, 2 weeks, 3 weeks or more. All right, so as I mentioned, you can use the sample searches as a gateway, as a stepping stone. In every strategy, you'll also see a few defaults in the search tool. One of them is weekly bull puts. We didn't see that in the sample searches, but if I go to weekly bull puts, this is a default screen that we've created based on what you'd want to look for a bull put credit spread. There we go. Looking for positions that are 8 to 17 days out in time. Okay, now again, you can see all the criteria that are being used, but why 8 to 17 days out? In each default search, you'll see a description. Ernie actually historically tested these, and he saw that the 2-week out series, long term, actually gives a better return because the losses aren't as devastating. So if you take a full loss on a position, even if you put in that you're going to manage the bull put spread if the stock drops below your short put or above your short call by 1% or 0.5%, the smaller premiums going 7 days out in time added up more quickly when you took a loss because you didn't collect as much. And he found that he got a better performance with the same criteria going to the 14-day out series. Okay, but that's all written up for you here in each one of the default searches, why it was selected, what it's looking for. And you see here there's discussion of using a positive MACD range as some of the technicals, as well as looking for stocks in an uptrend, and of course avoiding earnings as well. Right? So you can use that as a stepping stone for your own weekly search. If I wanted to just go 5 to 10 days out, again, I could change the dates to expiration of just 2 to 9. I could choose to look at all weeklies, but I'm going to go all expirations 2 to 9. I have to increase that, my apologies. I got to go 2 to 10. There we go. Sorry about that. All right, so 2 to 10, my apologies, because we're right at 9 days out to next week's expiration. And it'll still find the positions if they're there that offer the credit requirements that are available. All right. Now, as I mentioned, every strategy will look the same. In the search tool or the sample searches, you'll still have the same fields for options, technicals, fundamentals, and lists. And the technicals, fundamentals, and lists in every strategy are the same, the criteria you can use. What changes, of course, is just the options criteria. You don't really get a net credit in a covered call. You get a net premium from the call that you're selling. You do look at a percent return, but the correct term is percent return if assigned. And you're focused on downside protection. That's what changes. We'll look at that in a moment. What I wanted to show you is that, let's say you are a weekly bull put credit spread trader. We've shown how you can use the sample searches and our default searches in the search, which are available in all strategies, different themed searches for you to use as a stepping stone. So if you don't know and you're looking for trading ideas or a helping hand, start with those sample searches or start with the default searches directly in the search. But if you know your own criteria of what you want to look for, it's very simple to enter it and get your results quickly. So let's say I'm a weekly bull put trader. I'm looking for bull put credit spreads on stocks that are in an uptrend, trading above their 20-day moving average, maybe 50-day moving average. I want stocks that are mid to large cap and have shown, good growth in earnings, positive management, positive reinforcement. I don't want anything that's bottom feeding, perhaps. And for a 7-day trade, I want a net credit of at least 15 to 20 cents, and I want a return of at least 5 to 8%. And I want a 75% probability. Okay? Right there is more than enough to find the trades you're looking for very quickly. How would I do it? I'd go to my strategy. I'd click on search. I'd ignore the trades that appear, scroll right down to the bottom, and hit clear filters on the top of the parameter field on the right-hand side. This is going to empty everything out of our options, technicals, fundamentals, and lists. What do I want? I want next week's expiration. Well, I can choose all weeklies, but I'm focusing on 7 days out. It's actually 9 days out. So again, I'm going to go about 2 to 10. Again, why 2 to 10? I want to filter out the ones coming up on Friday. You could put in ranges for implied volatility of the sell and buy option. I'm more focused on net credit. We're going to start with a requirement of 20-cent net credit, 8% return. We can evaluate strikes in or out of the money as part of my filters. Again, I'm just going to use 1% out of the money. I'm going to focus more on my probability. The theoretical probability the stock would stay above my strike prices and the puts would expire worthless. I'm going to put that at 77%. Personal preference. I'm going to put strikes equal to 2. This is one of the things I talk about in the Managing Your Spread Positions archived webinars, and what I'm looking at for there is I want to do at least 2 points apart, so if the stock moves up, I can roll it to another strike in between without rolling both. Okay? All right, so there we go. And I can put in some option volume today, but with the weeklies, they're all going to have volume. All right, so what else do I want? Let me go to fundamentals. I don't care about stock price in this strategy, but I will in covered calls and cash secured naked puts. That market cap field shows me that mid cap is a filter here by billions, so I want to use greater than 2,000. Okay, so we're going to start off just mid to large cap stocks. And I mentioned, of course, that I'm going to look for an earnings per share growth of at least 5% or more, shown positive growth over the last years, price to earnings. But if you had a requirement, you wouldn't in this strategy, but for dividend yields, shares outstanding, price to sales, price to book, you can put that in. Most importantly, you check that box for not between now and expiration. Now the technicals. Many of you probably might want to look for stocks that are, some of you might bottom feed. You might want to look for stocks that are trading within the lower 20 percentile of their 52-week trading range. That's available here. If you want to look for stocks that are trading on higher stock volume, that's also available. I'm just going to look for an average stock volume. This one here is measured in thousands, so I'm going to just look for stocks that trade at least 750,000 shares on average per day. You can use fields for historical volatility, the stock volatility. So if I wanted to limit this to stocks that had a volatility of less than 50%, on ours, on PowerOptions, would be 0.50. So I'm looking at lower volatile stocks that don't tend to move as much. You can do that as well. We can use the Bollinger Band and Bollinger Band ranges, if that's something that you use. Basic one I'd look for is stock above 20-day moving average. I want to see stock in an uptrend. And then we can use the MACD cross signals if I want to look for stocks that have crossed, where the MACD has crossed the signal line in the last 2 days or so, or if it's over more than 5 days or more. All right, but all that being simple, for a bullish strategy, I'm going to keep it really simple. I'm not going to worry about Bollinger Bands, the number of days the stock has crossed the SMA 20 looking for a longer trend, the number of days the stock's been up or down, or the MACD cross. I'm saying I'm in a bullish strategy. I'm going to look for positions that have good average stock volume, are trading in an uptrend, are not too volatile here in the historical volatility. I want to only look for mid to large cap stocks and stocks that have shown good earnings, and I don't want to see stocks that have earnings between now and expiration. I might use this basic set of criteria, and by the way, you'll see a lot of those, the earnings per share growth, market cap, average stock volume, SMA, and MACD, when you're looking at any of the default searches. For covered calls, naked puts perhaps, calendar spreads even, married puts, different things of that nature. Rich says, do you have a recommend trade for each strategies? Not so much. Again, you can use the tools that the searches, Rich, we've set up as a stepping stone. You can use those and trade right off of them doing your research and analysis. Ernie and I have created these default searches to give you a leg up, to give you a starting point. What criteria would we start off with and then make basic adjustments? But this tool gives you the flexibility to make changes based on what matches your trading platform. We've got 49 people still on the webinar right now. Remember earlier we saw that 63% of the audience was trading vertical spreads. I can guarantee you that 2/3 amounts of, let's say, 50 investors that were here, so roughly about 34 investors or so, could sit in front of this tool, have a trading plan, and put in a bull put credit spread search. And we'd have close to 33, 34 different searches. They all might have used the starting point, the default search as a starting point, and then moved on from there. But that being said, I do have some things I want to show you, okay, as far as trade recommendations go. All right, so we put in our bullish criteria, and I put in some very basic views for my expiration time frame, of course, but minimum net credit, return, probability, and strike difference. I didn't use delta. You can. If you want to limit the short option delta in any strategy or long option delta, I didn't use implied volatility. I'm just looking at my screen. Across the entire universe of options, 4,500 plus optionable stocks, indexes, and ETFs, just changing those 6 or 7 basic criteria of looking for a bullish stock that does not have earnings and what credits and strategies meet my trading plan, and of all the 4,500 stocks, different expirations, weeklies, and different combinations, there's about 1.6 million credit spreads that the database is building in the background in real time and in every 20 minutes for the 20-minute delayed service. I've narrowed the entire universe down to 3 results. Wynn Resorts, Deere, which just had earnings last week, and Aetna. These are all positions that have a 77% higher probability above, double-digit % return, reasonable net credit of 23 to 27 cents, exactly what I said. Okay. Now, some of you may have a very high restriction that you might want to look for weekly options with a net credit of 50 cents, a return of, let's say, 15% or more for a weekly option, and a probability still of 75% or more, with showing I'd put in some activity here, at least that, and at least open interest of 10, but without any stock restrictions. You just want what's out there for 50-cent net credit, 15% return for a next week's series, 2 to 9 days out, and a 75% probability. If they're there, the system will show them. There's no spreads out there for next, sorry, there are. My apologies, I keep doing that. There we go. Okay. All right, so there you go. And again, why is this risky? Because I didn't make the selection to avoid earnings between now and expiration. We already know Vago has it coming up. I know Costco does as well. Tesla probably does too, so these would all be filtered out. But these are the only spreads that offer this high net credit with a 75% probability. If they're out there, this system will find them, okay? But if not, it won't be there. Very quickly, before I jump into covered calls, real quick to show some of the other features in the search function, Rich asked, is there a place where I can learn the parameters we can put in when I search the stock? Yeah, I mean, there's all variety of webinars. You can view our archived webinars at any time. This is a public page. You don't have to be logged in to do it, so you can go to powerop.com/webinars.asp. All right, I'll go ahead and send that there. And what do you want to search the stock for, Rich? Do you want to search for bullish or bearish? Well, it really doesn't matter, because if I go into the option strategy section, there are webinars here on what criteria you might look for calendar spreads, bullish or bearish, covered calls, selection criteria for buying options, which would be the same as a stock. If I'm going to buy a call, it's because I'm looking for a bullish stock. I might use the same stock criteria. Naked put positions, credit spreads, what kind of criteria you'd want to use, that's all available here for you for putting in what you'd want to see for which strategy. In addition to that, our Friday sessions are usually recorded, so in the requested topics field, I know there's one here from a couple days ago, options trading for earnings. There you go, Ade. There's one right there from 5/5/2017. We talk about trading options for earnings using the PowerOptions tools. But there's other one, I know there's one in here I just referenced the other day anyway, that talks about criteria to use for bullish and bearish stocks. It's a Friday discussion where the questions are brought in by attendees, and I just answer them based on what they ask. So, which parameters should I use? Oh, sorry, just reading a question came in. Okay. Frank B said, here's another question. It says, Frank B says, do you guys have pre-built screens? Well, yes, that's what we talked about earlier. So again, we talked about the credit spreads, but if I went to covered call, you could go to sample searches, and you've got covered call sample searches for broker and advisor recommended, ETFs, covered calls on dividends, stocks under $25, and weekly covered calls as well. But you're asking for a pre-built screen. You'd like to see the F-score screen by Joseph Petrosky. I don't think he makes that available for free. So it's not something that we could plug in. But if you subscribe to his service and you have his criteria, you can go into the search and you can plug in the criteria. This is one from an old webinar, but I'll go to weekly picks of the day, which is very important, and I'll talk about that in a minute. But you can go into the search, Frank, and put in specifically what you'd want to see. And to answer your question, Rich, what criteria would you use? Well, a lot of times, as I mentioned, what do we see here? For this covered call screen, we see some technicals such as average stock volume greater than 500,000, stock above the SMA 20, crossing the MACD and not between now and expiration. Most bullish strategies, you'll see that kind of search criteria. So we are kind of showing you these are the criteria that Ernie and I would start off with for the technicals and the fundamentals as far as what we would look for, and you can use that as a stepping stone or say, hey, well, they're looking for the average stock volume and MACD crossover and stocks in an uptrend, but maybe I also want to limit my volatility or only look for stocks with volatility above 20%, 0.25 or more, so you see some movement. Okay? Now, that being said, another advantage that we have for you covered call and naked put traders, there's two fields here under covered calls and naked puts called monthly picks of the day and weekly picks of the day. I'll just go to the weekly. There's only one here on Puma Technology, had a big jump yesterday from earnings. The other day, I apologize. What this is a quick listing of criteria that Ernie developed and back-tested extensively, many iterations of different criteria in the search to create for you essentially just the one to three positions that match this criteria. And at any time, very important, when you're looking at the weekly or the picks of the day for weekly covered calls or weekly naked puts, or the standard monthly, if you prefer to go 20 or 30 days at a time, he's developed a criteria set for you for covered calls and naked puts. But when you're evaluating it, you want to check on that link over here that says, see how we develop these results. And this is a full write-up on how Ernie walked through the process of using our historical testing tools to test the different criteria, the time frame he used, what his results were over time. So for the weekly ones, you can see that 80% of the trades were winners. The average return was 1.8, and the average loss on the losers was 3.2, but 20 to 80% over the tested time period. And it's starting with a $100,000 ending balance. It went to $142,000 for that testing period. Okay, and he also talks in here about what he used for stops in the testing as well. So you can use this in covered calls and naked puts, the weekly picks of the day or the monthly picks of the day. If you want to not create your own search, you don't know what to put in, rather than playing with the parameter field, you can use these weekly picks of the day as a starting point. And of course, as I mentioned, you want to check out, see how we develop these results, because Ernie talks about what he used as stop triggers and more. All right. But again, let me just go back to the search. I'm going to go to covered call. I'm going to go to the main search. Okay, we're going to stick with that weekly covered call screen. The field that we discussed for bull put credit spreads are the same. You have your options category, stock technicals, same ones, beta, percent of 52-week range, average stock volume, volatility, Bollinger bands, MACD. Fundamentals. Here's where stock price comes into play, but the same things are there. Earnings per share growth, price to book, market cap, screen for dividend or not dividend stocks using the married puts, the collars, the covered calls, and the earnings date field, right? Not between now and expiration. ADE and the long straddles and long strangles, you'll have this box that you can choose for between now and 1 week from now or 2 weeks from now, so you can look for stocks that have earnings coming up in the next 1 or 2 weeks for the long straddle or long strangle, and then isolate your expiration time frame to look for positions, that would naturally cross, where the expiration would be after, I should say, the earnings date coming up. You could see just 1 week from now or 2 weeks from now. Those are the strategies you would look for earnings and the lists. But they're all the same fields. The options are even the same as far as the categories, but as I mentioned, we see something subtly different. In a covered call, instead of just the percent return you saw in a bull put spread, you've got to look at downside protection, how far the stock can fall before you're losing money on the position, the percent if unchanged, percent if assigned, annualized as well. Okay, so what's subtly different here, and you've got Black-Scholes ratios to look for overvalued, undervalued, covered calls or naked puts. You can filter by bid-ask spread or percent bid-ask spread. In addition to volume, you can also screen for percent current option volume. If I only wanted to see stocks where the option volume is at least 150% of the average of the last 90 days, I'll put a percent current option volume of 150. Not guaranteeing we're going to see any results here. But then I'll quickly click submit with the other criteria, and there we go. Okay, so these are ones that have shown, that are currently showing, excuse me, an increased option value. That might be more important for those of you doing long calls or long puts, where you want to try to follow the crowd or look for positions that are showing that increased option volume. That's a filter you have available also. I'm sorry, Dean asked, do you have futures options data? Dean, I'm sorry, we do not. PowerOptions only tracks the optionable U.S. stocks, indexes, and ETFs. So we do not have futures data or commodity data here in our search functions and our search screens as well. All right, so we talked about the list. You could create your own list to remove a list as well. And remember, one important feature I didn't show, when you're in any strategy or in any search, you were looking at some covered call opportunities, just as we saw with the option chain, you can customize the data view. So we click on Choose Columns. When you're in the search, you'll not only be able to select to view, check the boxes for which option criteria. You could select gamma, theta, vega, Black-Scholes ratios, percent of assigned, IV ratios, and more. But anything that you wanted to see for the stock, PE ratio, broker recommendations, market cap, average volume, price to book, sector or industry, revenue, liabilities, EBIT data, and more percent short interest, number of days to short interest, Bollinger bands, for using that, you'd want to select that as well. Percent held by institution. So you can customize the search field. Just check the boxes you want. You can either change the column order down here below or click on Submit and Save Columns. Okay, and once you've done that, of course, you can refresh the data for what you'd want to see based on your trading. And yes, I'm sorry, one thing I didn't focus on is that over here, any of the filters that you can use in any strategy for any of the 4 categories, you can choose to filter by. So if I wanted to change this to sort by positions that had the highest implied volatility to stock volatility ratio, looking for overvalued options, or if I wanted to sort by annualized percentage of assigned, for example, or if you wanted to sort it by highest earnings per share growth, or even just alphabetical order by stock symbol, anything that you can use in the search criteria, you can use to filter your results. This isn't going to change much. It's going to show us the same 4 results, just going to be in alphabetical order now. Okay, that's all we changed. And of course, once you've developed a search that matches your needs, that you're most comfortable with, you can just go ahead and click the Save button here and name your search, put in a description, and then click Save this search. So now, every time you come back into covered calls, I'm sorry about that, anytime you come into the covered call screen or whatever strategy, your saved search will come up. The results for your saved search will come up, and it'll be there listed for you, but you can toggle between the default searches at any time or any of your other saved searches based on your needs. Okay. Ade says, do you have any suggested filter by strategies? Well, the best answer to this question is that when you pull up a default search, I'm going to go to naked put and I'm just going to go to search. I don't even know what the last one was. Okay. So here's a listing of 5 positions that match it's the weekly picks of the day. Okay. What do we have over here? Similar to what we saw with the covered call, isn't it? Because they're the same strategy. Okay. So what I'm answering to you is I'm not saying that there is a one screen. I mean, I could develop a white paper or a blog article that shows you what we would recommend. But what I'm showing you is that anytime you go into the search for neutral, bearish, bullish, or any strategy, the default criteria that are here, over on the right-hand side for our defaults, if you were asked, give me what criteria would you use for a covered call, or for a straddle, or for a strangle, what's shown in the active filters of the PowerOptions default searches are the starting point for stock, option, and list criteria that Ernie and I would use in that given strategy. It's already listed here. Okay, it's not on file. When I do bullish positions, I like to use that MACD. It's not done in this one, but I like to use the MACD crossover, and I look for stocks that usually have an average stock volume a little bit higher. That's my preference. Okay, but Ernie found with his testing on this weekly covered call screen that around 500,000 was a good enough result there, 500,000 average volume per day. to trade the positions. Okay, but on mine, I like to go 750. It's personal preference. That's the power of this search tool, is that I can see what these active filters are, as quickly make a change. And I don't think it's going to even change the results that much. It might be splitting hairs here. It's just a personal preference. I'm going to change that. I didn't change it at all. So they're both well above that line, but it was just a limitation. So anytime you pull up a search, the criteria that being used are the exact starting point that Ernie and I would use. Now, why do we have different default searches then? Well, here's the naked put one. Sometimes I want to use monthly. Sometimes I want to use weekly. Okay, and same for credit spreads. Sometimes I want to go further out in time and look for higher cap stocks. We saw in the sample searches for bull put credit, the safety first. Large cap over 10 billion with a high probability of expiring worthless, but I'm going further out in time with this search. Why? Because those stocks that are safer, larger cap, don't have a lot of premium here in the 7-day or 8-day out trades. I got to go 25 to 30 days out. Okay, so that's what it's looking for, I think, at least 15 to 20 days out in time. So when I want to use weeklies, what search would I use? Well, my starting point is going to be that weekly bull put search. If I wanted to go to shorter time frame, I can do that. Okay, but I'd start off with early selections with stocks over the 20-day moving average, days crossing the MACD signal, and of course, avoiding stocks that have an earnings between now and expiration. My universe is limited to 13 results. I don't need to add more filters in necessarily. If I wanted to narrow it down to 2 or 3, I could do that, but it's already there. So do we have them on file? Not exactly, but this is the file. Anytime you pull up a sample search or a default search, that's the file. Of course, you remember you can save as many searches as you wanted in each strategy as well. All right, ladies and gentlemen, well, I encourage you to throw in any last-minute questions that you have. We are currently at 1:10, 1:15, 1:12 Eastern Time. Sorry, so if you do have any further questions, go ahead and send those in there. I just wanted to review very quickly, what are we going to do for finding positions one stock at a time? All right, the best tools on PowerOptions, if you're using covered calls, Quick Find tool gives you a good monetary view, but I prefer the option chain. So I can customize it, I can see the probability, I can see the return if assigned compared to the downside protection. I can toggle quickly between different expirations. The Quick Find tool is very useful to start with. For those of you just getting started, I prefer to use the option chain. Same with naked puts. There's a search by symbol available, but I like to use the option chain for my naked puts. The 63% of you doing the credit spreads and the vertical spreads, search by symbol tool is useful. I prefer you to use a spread chain, and that's what I use. Okay, when I'm doing my spreads on ETFs or broad-based indexes, what I'm going to do is go ahead and look at that position using the spread chain tool. Also, if I've decided I'm going bullish or bearish on SPX or SPY, I want to see the parity trade. I want to compare the credit to the debit spread to see which one does give me the best bang for the buck. Those of you buying calls and puts, I think the long option finder is your best bet, because if you've already decided you're buying a call or put one stock at a time, remember, you already kind of have a projection of where you think the stock's going to go. By the way, I might also use the long option finder as a basis for which option I'd buy in a calendar spread. If I'm doing a diagonal spread going out 6 to 8 months and I feel the stock's going to move up in price, what I'd likely do is use the long option finder, say, okay, I'm interested, well, I'll use Apple, and I'm going to select the October series, or let's say I expect the stock to move up 10 to 15% by October. And it's going to show me which long option is going to gain the most. That might be the one I use for my diagonal spread, and then I'll go back and compare it to a short option using the custom spread tool as well. Okay? Okay, let's see here. And then, of course, for long calls or long puts, for married puts and collars, we talked about the search by symbol, but if you already have a stock that's up in price, then you can go ahead and, I apologize, you already have a stock that's up in price, that's when you use the insurance tool. FF Trader asks, do you have research for volatility skew? I'm going to go back to our screen here real quick. I'm going to pause it here. Go back to PowerOptions, my apologies. There we go. And whoops, didn't like what I wanted to do. My apologies. A question came in is, do you have availability for volatility skew? Yes, we do have a volatility skew tool that's available by stock. You can do the strike skew or the time skew in our signature tools. Also, the market sentiment tool is there, the spread chain, the long option finder, stock repair tool. If you've got a stock that's down in price, you just put in your stock symbol and your cost per share. This will help you try to build a ratio call spread to get back to break even faster. Also, the max pain or strike of pain tool is there as well. Okay. Sorry. Next question came in from Frank. It says, how many technical indicators can you use in your stock screens? Okay, it's right there. It was shown. I don't know if you saw all of them, but let me go back to just a naked put search, Frank. You go to technicals. What we consider technicals, beta, percent of 52-week range, percentage stock volume, average stock volume volatility, broker recommendation, RSI. It's also shown there as well. Number of days to short interest. Okay, and there's a description here of that. The percent BB20, this is where the stock is in the Bollinger Band ranges. In the default long call and long put search, you'll see a default search for Bollinger Bands. That's where I would likely get started. If you didn't know criteria to use, we've created a long call and long put screen based on the Bollinger Bands for you to use as a stepping stone, and the full description is listed there. Band width, of course, how wide is the Bollinger Band? Simple moving average, and the historical moving trends. And we want to see stocks that have crossed at least 3 to 5 days over their 20-day moving average, so it's been expanded out. Or do we want to see ones that have just crossed over in the last 2 days, so it's had a recent crossover? That's how I use the MACD a lot. The MACD crossed the signal line. I might look for a position where the stock has crossed over the MACD for a bull spread within the last 2 days, so it just had a crossover, and then I evaluate other things as well to look for bullish indications. But let us see that crossover. That might be an indication for me for a long call. Married put, maybe even a straddle or strangle long term, not an earnings one. All right, so those are the technical indicators that you can use. These are available for each strategy. Bill says, I have an IRA and you can't use iron condors. Combination of a bull put credit and a bear call credit. He can't do it there, but it sounds like he can do debit condors, or what he calls put condors. Well, so a put condor, you're comparing a debit spread to a credit spread. I don't have a great way to do that, but if you can do debit condors, I would use the spread chain tool. Okay, and we go back to bull puts and we go to spread chain. And I'm going to take, I could use QQY, but I'm going to take SPY. Okay, and I'll go to debit spreads. And so I'm doing a bull call debit that I'm paying for, not a credit, and a bear put debit. So it's a debit condor. Maybe you can use that in your IRA. And, I'll put a max debit range. What do I want for each leg, of course? Well, let's start there. I'll use 2-point spread on SPY again. In the money range, up to 3% in the money or more. Minimum return and probability of, let's just start with 70, Bill. Let's see what we got. Oh, okay, take that out. I don't care about the net credit there. 5% return, 70% probability, percent in the money. Oh, I'm sorry, that was my fault. I wanted greater than 2 or 3. SPY, Mike, you got to go 1%. Take that out. I might have to drop the probability in a second here. Okay, well, anyway, this is the tool I would use. Let me try a 5-point spread width for us. Nothing, really. It's strange. I'm sorry about that. I don't know why nothing's coming up. Let me try Apple real quick. Something wrong with SPY today, isn't there? Yeah, this is embarrassing. I got nothing here. I take out the max debit. Probability range is good. Spread width, let's just put it 2 again. I apologize. That's just funny. Okay. I'm going to have someone take a look at this. The programmer. This is beyond the scope of my intelligence. I don't know why nothing's coming up here on the debit spread view. All right. So, but this is the tool I would use. I'll get it fixed for you, but it'll show you the bull call debit to the bear put debit, and you'd be able to compare your condor. Remember how we did it on credit spreads earlier in the webinar? The spread width, let's just put 1. Maybe that's the problem. Sent out of the money range, minimum net credit of 5. Oh, that's why. Let's go to 70. Okay, so now we'll see bear calls and bull puts. Really? Unbelievable. Okay. All right, but you see the bear calls on the left side. I'm sorry, bull puts on the right. That's terrible, terrible presentation on this part of it. But using the credit spread view allows you to build iron condors, which you showed earlier. Debit spreads would allow you to see if you wanted to do debit condors. But I don't have a tool that does a bear put debit and a bull put credit. You could search for bull put credits, then link to the custom spread tool, and then you see that as well. Okay, FF Trader asks, what are your sources for analyst ratings? I believe we use Zacks and we look at others. And then, of course, the question came in, does your tool have volatility? Yes. Okay, so let me show you my apologies here. If I go to long call and I go to search, so most single option strategies, you can screen by standard implied volatility of the option, the percent implied volatility range. Where's the option's implied volatility right now compared to where it has been over the life of the option? So the theory isn't selling. I want to sell into implied volatility range of maybe greater than 80%, hoping it pulls back and my option price decreases. When I'm buying, I might want to buy in the lower range of IV. The IV over HV, looking for overvalued options, the implied volatility of the option, the historical volatility of the stock, and IV over SV. The SIV, the average implied volatility of the near-term options compared to your current option. Again, overvalued, undervalued ratios. And of course, in fundamentals, we already talked about using technicals, the stock volatility as well. So you can frame by stock volatility, option volatility, and a spread, the volatility ratios, the implied volatility to sell option to the buy option, and single option strategies, you'll be able to look at IV range as well, okay? And that will get you to where you're going. Where does your PowerOptions tool scan for ratings on stocks and US ETFs? The broker recommendation. Okay, so that I mentioned the Zacks levels where we get some of our data, but in the technicals, the average broker recommendation is listed. Okay, you see here the Zacks investment research, and the recommendation change, which is a popular one. It shows you a change, positive or negative, in broker recommendations. So some investors I talk to who do weekly options, they know that the Zacks updates this weekly, so what they're looking at is ones that have changed to a positive, actually dropped in ratings, where one is a buy, one is a strong buy rating, 2 is a buy, 3 is a hold, and so forth. So if they see anything that's lowered in value, a negative average recommendation change, that means it's gone up higher in the broker ratings. Okay, it's increased for us, so that's available there as well. Okay, all right, so that's essentially, I think, all the questions that came up. I wanted to do something real quick here as well, going back to some of the main discussions. We talked about the tools to use one stock at a time. And starting off with the searches, what criteria would you recommend? Are these recommendations or suggestions? No, but I will tell you that the criteria that we're using are the starting point. Anytime you pull up one of those default searches or the sample searches, that's the starting point. That's the criteria Ernie and I would use if we were opening a specific position. That's why we've created them there for you to use as a stepping stone. We know you have different goals, different trading goals, and a different trading plan. This tool is so powerful because you can take that default and customize it to match your specific needs, and in an instant, after changing a few criteria, find only the spreads, the straddles, the diagonal spreads, covered calls, naked puts, even just long calls that match your risk-reward requirements, your stock technical and your stock fundamental data. It's a time saver. You've narrowed down the entire universe of options. To make things faster, for the popular strategies, we saw it with covered calls and naked puts, you have those picks of the day. Even in bull puts and bear calls, we tested that weekly default search in the search tool for maximum performance over a time horizon. So what criteria am I going to use for a bull put? If I'm trading weeklies, I'm using that weekly bull put search or the weekly bear call search if I'm going bearish. So your answer is, the question is, what criteria would you use? It's already shown there for you. Okay, so for covered calls and naked puts, you can use the picks of the day as a starting point. It's a great place to get started. The default searches, talked about that one there. For long calls and long puts, I'd suggest trying the Bollinger Band default search as a starting point. That's where Ernie and I would start, and then customize it based on that. Those of you that are doing protected positions for married puts, use a radioactive trade as the default that comes up. Those are the positions I open regularly in my personal account for the Fusion subscribers at Radioactive Trading, and for callers, it's the initial value search. Basic tips on the search tool. Use a default criteria as your stepping stone. But if you're adjusting criteria like we saw today, notice how I only made maybe 1 or 2 changes at a time and then hit submit search. Okay? What I don't want to do is take one of the default criteria, change 10 or 15 of the technicals or fundamentals, and then hit submit and see something that comes up that says no results match your criteria. I don't know which one of those 10 did it, really restricted it, or maybe I entered an error. It's better just to use 1 or 2 at a time when adding to the default searches or adjusting criteria, then hitting submit. Don't feel overwhelmed. We saw you could start from scratch by hitting clear filters. Even if you told me, Mike, I want to trade standard covered calls on stocks under $80 that pay at least a 2% dividend, and I want to be out of the money, that 4 criteria right there, I'd put in the standard June expiration. I'd look for stocks under $80 or maybe $5 to $80. I'd go to percent dividend yield in the fundamentals and look for stocks that paid at least a 2 or 3% dividend based on your requirements. I'd put in a minimum range out of the money of, let's say, 2 or 3% out of the money or more, and look for a minimum option premium of at least maybe 40 cents or 50 cents, so it's worth my while. What is that going to do? I bet you that's only going to give me 15 or 20 results across the universe of options. That limited criteria load. It's that easy to create your own search if you know. And don't feel overwhelmed. Start with the criteria that you use in your trading, and never, in any strategy, feel pressure to use every available criteria. I encourage you to get to know what all the criteria are in your spare time, but to get started, put in what's important to you. Don't worry about things of days. If you don't know what days of short interest means or how you'd use it in your trading, or IV over HV, if you don't use them normally, don't worry about them. Learn them in time. And I'll help you with that, of course, through email, coaching sessions, or phone calls, other webinars. Learn them definitely, but don't feel inundated. Don't feel overwhelmed by all the criteria that's shown. Use what's important to you, and you'll find it out there. So to create your own search, as I mentioned, even if you have something basic, only 3 or 4 criteria in your mind, start off from scratch. Hit clear the filters in the search. Put in the settings that apply to you. If you see no stock options that match your criteria, open it up a little bit more. Maybe we're too restrictive. And if you have too many results, now we can increase them. So what would I do? Let's say I put in that dividend search I just mentioned with that 5 criteria, and it did come up with 130 results. What would I do next? Well, if I was comfortable with stocks that paid a 3% dividend, I might be comfortable with stocks that paid a 4% dividend or more. And I have 133 results of covered calls that offer me at least 40 cents. I'm going to love seeing ones that offer me 60 cents. I can push the limit there. So put that in. And then I could add other things in. What about stocks that are in an uptrend? Maybe I do want to avoid earnings. Maybe I want to avoid the ex-dividend date because I want to stay in the stock longer and not risk early assignment. Those are all things you could do, and you would filter that list down to, again, only the 20 to 30 results that match your criteria, which is a few simple clicks. You can screen for ETFs. There's a list there that just shows you indexes and ETFs to screen against, and as I showed you, you could choose to remove the inverse ETFs, counter market, or the leverage, those 2 times, 3 times ETFs, or you can screen specifically against them as well. Okay, and remember, the most important thing is we have created the criteria for you. We're not throwing out random criteria. If you're in a neutral to bullish position, the stock and technical criteria that Ernie and I have put in there in those saved searches are going to be for neutral to bullish positions. You're going to see stocks that are trading in an uptrend, have good earnings, good market cap, good average stock volume, things you'd look for more of a stable position. But always make sure that anytime you're putting in criteria for the stock or for the option, it matches your market sentiment for the strategy that you're doing. Okay, you don't want to necessarily look for a bearish stock to trade a bull put credit spread. I could show you, and you could easily create a search to look for bull put credit spreads on stocks that are depressed and been trading down, what we call sometimes bottom feeding because you think it's going to recover. But in general, I don't want to look for a stock that's trading below its 50-day moving average and the MACD has been below the signal line for 10 days if I'm doing a bull put credit spread. It's the wrong trend. Okay, you can do weekly, of course, monthly. Make sure you're putting the criteria that match how you're trading as well. Let's see here. Okay, so question came in from Rich. He says, Momo's on the list of monthly naked puts of the day, today down 7%. If you had sold the put options before it fell, what can you do now? Okay, here's the best idea, Rick. Go to that webinars page I already sent, the powerop.com/webinars.asp. Click on the Options Strategies tab. Underneath the Options Strategies tab, you're going to see a webinar titled Managing Your Naked Put Positions. It's a discussion designed to show you how you can, what triggers you might want to use before this happens, but at the same time, what you might want to do other than just take assignment or close out of the position. What is the process you'd want to walk through for deciding to adjust the position and potentially turn the losing trade into a winning trade? In addition to that, going to that webinars page again, powerop.com/webinars.asp, in the options concepts section, I believe it's called, it's options concepts, yep. The second webinar listed is Manage Your Broken Position. It's a full webinar on management ideas for stock that has moved against you, stock that has moved against you where you're in a covered call, or you got put stock that's down in price from a naked put position. What are some alternative ways you might look to manage that position and help you get back to break even faster? Okay, so check out the webinars page. You've got two webinars, an option strategies, manage your naked puts, and options concepts, manage your broken position. All right, so if you haven't done so yet, make sure that you go to powerop.com. You can just put in your name and email address, and we'll give you a 14-day free trial to test out the tools. Our subscription services after that, we do offer an end-of-day data service. Now, the picks of the day for covered calls and naked puts are not included in the end-of-the-day subscription service. It is only $40 per month. The data only updates the end of the day, but you don't get access to the picks of the day for covered calls, naked puts. The picks of the day are available in the 20-minute delayed service at $60 per month, and the real-time service, which is available for $120 per month. We also offer back testing tools, which is an additional $40 on top of the 20-minute delayed or real-time. I handled all the questions that came through. We lasted a little bit longer than I wanted to today, but that's great. We got through a lot of information, and I hope you saw how powerful these tools can be to help you not only get started with criteria you would want to use for a given strategy, but also how quickly you can navigate the tool and make changes so you're finding just those positions that match your personal trading plan. And of course, the power of some of those signature tools for finding positions one stock at a time, whether you're looking at credit spreads using the spread chain or the quick find tool for covered calls, but the long option finder for long calls and long puts, and of course the insurance tool for married puts and collars. If you own a stock that's up in price, it's the best way to show which put options will give you the best locked-in profit, and then you can still see which calls you can sell against it to increase that. Guaranteed profit to the downside, still more room for upside potential profit and generating a premium as well. But if you do have other questions, remember, you can email us at any time to support@powerop.com. If you are currently a trial member and a subscriber, remember you can schedule a coaching session at any time. Essentially a 40 to 45-minute phone conversation with myself or Ernie. We'll walk you through the tools on the site, answer any questions that you have. Of course, you can call us during market hours. You can reach us at 877-992-7971 if you live inside the U.S. If you live outside the U.S., you can reach us at 302-992-7971. And remember, in addition to what we showed today about finding new positions, the other tools that are available allow you to further research the position, analyze it, compare to other positions as well. You can run what-if scenarios using the profit and loss chart and the custom spread tool. And then, on top of that, we still have that powerful set of portfolio tools to help you track and manage your options positions. And as you're tracking positions, you'll be able to link to our position analysis tool, which will give you ideas for rollout opportunities, where all the math is done for you, and you can see, can you take a losing trade into a winning trade or increase the profits you already have to still match your trading plan with just a few simple clicks from your tracking position. Well, ladies and gentlemen, thank you for joining me today. I hope you enjoyed today's presentation. I look forward to seeing you all online again, or maybe on a coaching session perhaps, or just a general phone call or conversing with you via email. Have a great trading week and a great holiday weekend coming up. Remember, the markets are going to be closed on Monday, so we'll have a shortened trading week next week. And again, take care, and I look forward to seeing you all soon. Good night.